Welcome to today's Explainer. We're breaking down this massive risk-on market snapback for July 27th, 2026. If you've been feeling the pain of the tape lately, man, today was the exhale we've all been waiting for. Let's unpack exactly what triggered this reversal, where the smart money is moving, and how you should position yourself for the rest of the week.
Here's our rundown for today. We're looking at 1. The rebound and macro drivers. 2. Institutional flows. 3. Sector shifts and top movers. 4. Key earnings. 5. Market buzz and scuttlebutt. And finally, number 6, the setup for tomorrow. Let's jump right in.
All right, section 1, the rebound and macro drivers. Let's look at the catalysts that completely flip the script and snap that brutal 5-session losing streak. So the Nifty absolutely roared back to life today with incredible breadth. It surged 229 points to close at 23,995.95. Honestly, a tantalizingly close finish, just shy of that massive 24,000 psychological resistance level. And the best part? This wasn't just a narrow, top-heavy rally. The buying was broad, and it was aggressive.
The Sensex mirrored that exact same strength, piling on 776 points to close at 76,835.78. But, the real story of the market's health was under the hood. Mid-cap indices jumped 1.1%, and small caps, they decided to throw their own party, outperforming with a 1.3% rise. All 16 sectoral indices closed in the green. So, what was the magic bullet?
Well, the absolute master switch for this rally was crude oil. Think about last week. A suffocating war premium drove crude toward $100 a barrel, dragging equities down with it. But today, Brent slumped back below $90 as the US and Iran paused strikes, and traffic in the Strait-of-Hormuz normalized. That geopolitical exhale instantly unwound the war risk premium. Equities took flight.
Moving on to section 2, institutional flows. It's one thing for retail to get excited, but we've got to follow the heavy hitters to see how they reacted to this sudden crude relief.
Okay, foreign institutional investors did sell for a 6th straight day, but look at the magnitude here. The outflow shrank drastically to 1,688 crore. That's way down from the 3,900 crore dump we saw just a few sessions ago. And, as has been the trend lately, this selling was effortlessly absorbed by a really robust domestic institutional bid of 2,329 crore. Domestic money is basically acting like a giant sponge right now, cushioning every single foreign sale.
Section 3, sector shifts and top movers. Let's see how that drop in global oil dictated today's sectoral leadership. That drop in crude completely flipped sector leadership across the board. IT, media, and realty led the charge as relief washed over the tape. On the flip side, oil and gas took a major hit, essentially serving as the market's sole lagging sector today. It makes sense, right? When crude drops, upstream oil companies lose that juicy realization premium, and the market prices that in immediately.
Looking at our leaderboard, we had some spectacular single-stock fireworks. KFin Tech skyrocketed 10.7% on a top-line beat. Laurus Labs popped 7% on massive profit growth. Concor rallied nearly 7% as value buying met those lower anticipated fuel costs. Meanwhile, ONGC proved to be the day's biggest Nifty drag. It dropped 4.1% as those upstream premiums evaporated into thin air.
All right, section 4, key earnings breakdown. Let's zoom into the micro level and break down 3 phenomenal earnings reactions that truly define today's session. First up, IDFC First Bank absolutely smashed it. The stock hit a 52-week high after posting its first ever quarterly profit above 1,000 crore. They came in at a record 1,075 crore, which is a massive 132% year-over-year jump. You add a highly impressive net interest margin of 5.96% to that, plus gross NPAs dropping to 1.51%, and you've got a textbook clean earnings breakout. The stock was rewarded with a solid 5% pop.
Then we've got KFin Technologies, which surged nearly 11%. The street heavily rewarded a massive 30% operating revenue beat, totaling 360 crore. And the standout here? International revenue. It shot up 182% thanks to their Ascent integration. The market loved this top line and AUM growth so much, they completely ignored a slight 3% dip in overall profit.
And Laurus Labs, they jumped 7%. Their net profit simply exploded by 125% to 362 crore. This was heavily driven by EBITDA margins expanding to nearly 32% on the back of a major CDMO ramp-up. Brokerages are already seeing more upside here. Honestly, it's a brilliant example of how executing on margin expansion can violently re-rate a stock in a single session.
Moving into Section 5, Market Buzz and Scuttlebutt. Let's step away from the hard numbers for a second and explore the dealing room whispers moving the needle behind the scenes. First up, there's some heavy chatter on the financial wires suggesting private equity sponsor Carlyle might offload up to a 10% block in Piramal Pharma. We're rating this as a medium probability rumor. Now, if it's true, it creates a near-term supply overhang of around 3 to 6% at the block price, though the market will probably absorb it over time. Definitely keep this on your radar if you hold the name. We're also tracking a flurry of other rumors. We've got medium probability whispers of a 2.4% stake trim by Bain in MCure and fresh government stake sale fast-tracking for LIC. Both of those act as near-term supply overhangs. But on the positive side, those recurring rumors of AGR relief for Vodafone Idea are circulating again. Confirmation there could spark a 10 to 20% rally. And finally, whispers of a massive, lumpy defense order for data patterns could mean a quick 5 to 10% pop if it hits the exchange. Finally, Section 6, the setup for tomorrow. With the earnings digested and all the rumors cataloged, here is exactly how you need to view the setup for the next 48 hours. Heading into the weekly index options expiry, the options data paints a very clear picture. The 24,000 mark is acting as a major gravity point, the max pain level, for the Nifty. We're seeing heavy call writing resistance up at 24,200 and really solid put support down at 23,000. Meanwhile, Bank Nifty has its max pain sitting at 57,200 with strong put support pegged right at 57,000. You're going to want to buckle up because it is going to be a packed, highly volatile week. Tomorrow, July 28th, heavyweights HUL and L&T report post-market. That means single stock gap risk is exceptionally high. That cascades directly into a high-stakes monthly F&O expiry on Thursday the 30th, which also coincides with Vedanta's first post-demerger result. Basically, expect elevated, rollover-driven volatility going into month-end. So, what's the play? Our top actionable idea in focus for tomorrow is going long on IDFC First Bank to play that clean earnings breakout we talked about. The catalyst is a clear post-result re-rating fueled by exceptional loan growth momentum and shrinking NPAs. The primary risk you need to watch out for, a sudden broad market reversal or just natural profit booking after today's initial 5% pop. As always, please remember this explainer is strictly personal research compiled for educational purposes. I'm just here breaking down the data, but you've got to do your own homework and manage your own risk before making any trades in your brokerage account. I want to leave you with the most crucial question to ask as we wait for tomorrow's opening bell. We've seen domestic money cushion the fall, but foreign institutions have been selling for 6 days straight. So is this sudden easing of oil prices exactly the macro relief FIIs need to finally flip back to net buyers? Because if they do, combined with this relentless domestic strength, well, that's the exact recipe for the next major up leg for the markets. We'll be watching the tape closely tomorrow. Thanks so much for tuning in.